Hey, hello, friends. This is Martin, and this is Martin from Seekers. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what happened in the market during the previous week, and then also plan for a better trade plan for the upcoming week that's starting day after tomorrow, February 10th, Monday, 2024. So we have a lot of things lined up. Let's get started. We'll begin with weekly charts that you're seeing, weekly view of the Nifty, and the daily is there on the right side. Yeah, it's within a trend line channel, and a bounce up attempt is what you're seeing there. And what you see here on the right side is also a daily view where Nifty is hit the top of the channel and then doing a retracement within a parallel channel. And Banknifty likewise, we see that it's an ascending wedge and market is taking support and bouncing up. Banknifty's daily showing that bounce up move that is happening inside a trend line channel. So that's the story. And basically what happened was it was a flattish close, but positive close on Nifty, the Banknifty. That's 0.33, that's 77 points upon the Nifty, and managed to maintain the 20 exponential moving average above, right, after previous week's correction of 13.3. So Banknifty also is actually, Banknifty has done much better, 1.3%, it's 650 points nearby, and maintained the 20 exponential moving average above position, and the correction for that was around 12.1%. So that's a summary of the action, and it was a week, the first week after the budget announcement that happened last Saturday, and also it was RBI rate cut decision that came on Friday, which is positive. Both positive, but market did some pre-budget moves, but was not very much excited on the outcome of the budget as such. Same was the case with the rate cut. The outcome reaction was not very positive. Now we have the elections in Delhi. We just come out with a stable government, positive news, and we are to see how the market is going to react for that third event in the last 2 weeks. And candlestick wise, if you see here, you see that the second week where we have a green week, almost flat is green. You can see on Banknifty is more than a flat, more than 1%, 1.5% of move. So that's the second consecutive week, but the candlestick is green, but it happened after a dip, and it's bullish. Bullishness is what you see, but it's not confirmed of a breakout as such unless it moves about 24,800 or somewhere. It's a long way to go towards that. Same in the case of Banknifty also. So lower low, lower high pattern continues to be there in the medium term. Look at the daily charts of the Nifty and the Banknifty. So it was almost like an inverted V move in the case of Nifty. Market was excited on Monday, Tuesday, and the last 3 days it met with resistance at the top of the trend line channel. And Banknifty also, first 2 days of the week was very exciting after the budget. It's a post-budget move probably, but was not too excited the remaining 3 days in the Banknifty also, but it tried to consolidate instead of correcting like Banknifty. But overall, Banknifty has maintained 50,000 by the end of the week, and Nifty has maintained the 23,500 level. Right, that's a summary in substance. So it's almost an inverted view. Inverted V-shape, a volatile week for the Nifty and Banknifty, while overall we managed to close flattish, and candlesticks are showing green on the weekly, and Friday it shows bearish candle, but the daily gains are showing red. So basically it was an attempt, a decent attempt, continues and managed to close green, and like I said, the second half was not that great. Monday, Thursday, Friday was not that great after the initial 2 days of performance. The Bollinger Bands are showing some beginning of an expansion. Did not confirm that. met with resistance before that. But Bollinger Bands on daily is showing some expansion of the upsides. It's trying to come out of the consolidation. Nifty and Banknifty both are showing that big enough an expansion. It's going to confirm expansion, but it's bullish bias, and there is a probability that the expansion can continue and the market can move further up. Moving ahead, we'll see the momentum of the RSI indicator. What does it say on multi-time frames and on Nifty and the Banknifty? Left side you have the weekly, right side of the Banknifty. Momentum and trend. Trend indicator is the ADX and RSI is the momentum indicator. So basically, it's sideways with respect to the momentum, absolute sideways on both time frames, and trend is remaining in the bearish zone on the medium term, but short term trend has crossed over to the both zones. So that's the story about that you can make out. Now, India weeks, the fear and greed weeks had cooled off following the budget and the RBI cut. It has come down to the low voltage region of 13.6. Previous week was a big crash after the budget, and another 3% fall this week of rate cut. So VIX has cooled off, the fear has come down, which is giving some hope that the rally the recovery can continue. Looking at the open interest analysis, it's not very good picture. On Friday, it was futures open interest showing short build up on both, and options open interest for the February 13 weekly and Banknifty is February 27 monthly. It's showing huge resistances out there, and PCR is not that great. 0.7 PCR is bearish, 0.9 also is bearish for Bank, but Banknifty comparatively seems more stronger with respect to the options. But that's a monthly, and this is the weekly. That's a difference. So open interest is showing bearishness, and moment when the trend sideways, and support resistances can be derived from the open interest charts that you see below, where the highest put and call rating is seen. So support is seen at 23,000, resistance is seen at 24,000. Second highest support at 23,200 and 23,800 is the resistance. Second highest resistance of the call rating. Banknifty 49,000 and 52,000, where the highest put and call rating is then 50,000 and 51,000. The second highest put and call rating is seen. PCR and the open interest futures we already seen. So it's bearish. Options and futures are showing bearishness. Levels show not very wide, range, between 49 and 52 is 3,000 points. 23 and 24, 1,000 points. But 49 and 52 is for the monthly expiry of the Nifty, Banknifty. But the other 1,000 points range as per the open interest of options for the February 13th weekly expiry. Now, another way of finding support resistances is to look at the charts like, these charts are clearly showing that it's a trend line move, and it has hit the top of the trend line and then met with the resistance. What additional things that you see is the expansion moving averages and the previous supports and the previous swing lows and the Fibonacci retracement levels. That's what we basically use. All this is mentioned here. Fib 50 is Fibonacci retracement. Lemma is daily expansion moving average. RN is rounding number. PSL, previous swing lows and previous resistance PR. Right. That's how we derive. So look at this chart and try to understand. So the first resistance would be at this 200 expansion moving average that comes in at 23,700 nearby, and after that you have 23,888 where the Fibonacci 50 resistance is there. Then 100 expansion moving average will come to 23,900 nearby. 24,000 is going to be the rounding number big resistance, and then 24,226 and 24,334 where the Fibonacci and the previous resistance zones are there. After that 24,500, that's the resistance. The upside downside first support would come in at the 20 moving average at 23,430, and then after that Fibonacci 61 supports at 23,154, and then if that is breached, you will find at the latest zones of the previous swing lows at 22,786, 23,000 is a major support zone before that. Yeah, there is. And that's what you can expect for the next week. Which levels exactly is mentioned here, we can make out that support resistance. In Banknifty similarly, first resistance would be to take out that 200 expansion moving average that comes in at 5,218, and after that 100 expansion moving average at 5,833, and there is Fibonacci retracement resistance that come in at 50,300 nearby, and if that 5,633 is taken out, it can move towards the 51,000, and then 51,176 as some resistance, and then it can head up to the 52,000. Similarly, downside supports could come in at 49,622 if the 50,000 is breached once again, and Fibonacci 16 would come in close to the 49,300, and if that is breached it can fall down towards the Fibonacci 78 in the previous ring low confluence at 47,876, but 48,000 can be a support before that. It's a parallel channel, you can clearly see that it has to take out resistance in order to move towards the top of that trend line channel and then break out from there toward the all-time highs. That's levels are clearly marked here, making note of the supports and resistance levels. So we have to correlate between the open interest based support resistance zones and the chart base, and then come to a place where you can place your bets on the upside and downside, but again bet on the calls and the puts at those ranges. Let's move on and try to understand what the different sectoral indices are talking about. So we had a recovery week last week when it was the IT sector, the metal sector, auto sector, pharma sector, all of that moved up. IT 2.1%, metal at 3.5%, pharma 3.5%, and auto 0.5% up. But none of them are good enough to make long-term bets because they are sideways with the medium and the short term. None of them are bearish on sideways, so it's pure sideways move that the sector indices have. But look at what happened to FMCG in reality. Those were the two sectors which had shown green. Only two sectors had shown green last week, but it had completely taken out whatever gains that it made, and FMCG fell 5.7%. That's a big fall. It's a wide range bearish candle, and it has suddenly fallen from bullish to the sideways in the short term. So basically FMCG reality also were the only two sectors which had suddenly fallen down for some reason last week, while all the others have moved up, and overall it's a sideways momentum wise in the medium term that we can make out from that. So sorts of that, some different sector indices are shown here. You can see IT is there, fall to the sideways and struggling there. Metal is there, has gone to the bottom of the sideways and then trying to move up. Auto is also somewhere in the median of the parallel channel and then taken support with the RSI 40 supports and then trying to move up, consolidating. And same with the case of pharma, also has retraced to the bottom of the channel and then trying to bounce up from the RSI moment of 40. FMCG has reached the correction end of the channel and then momentum support. There is a bullish divergence there, so every chance is there for it to move towards the top of the channel going forth. And reality index is the midway after a good correction from the bear zones. It has climbed back with the sideways and trying to maintain stability there. If you try to understand the heavyweight stocks that contribute maximum to the index, these are the three stocks that comes in first in our mind: the HDFC Bank, the Reliance, and the ICICI Bank. So we had a green C in all of these, but we can clearly understand that it's in the sideways momentum and then trying to move up. The biggest recovery for the Reliance is more from the bear zones to the sideways, done range shift momentum, which is extremely bullish, with the divergence and then trying to move. So it's very positive, and there is every chance. This is a buying opportunity for the Reliance probably. There is every chance that it can move towards the top of the channel. Now ICICI Bank was steadily moving up, and this correction has come in there, and now it's trying to move up and make the all-time highs. Looks like, right? When you had IT stocks, Infosys and TCS are sideways and struggling, while US markets also having some interesting, red moves. Like Bank as usual is a contrast stock, nothing much to say. It's always sideways, and ITC is hit back after trying to break out from that cup and handle and red candle there, but sideways is maintained on this medium term. This is about market mid cap and small cap. You can see it closed flattish last week. It had taken the support of RSI and never fallen below that, and then trying to find some support. This case with Nifty and Banknifty. Right? Some correction has happened, but it's not ready to fall further. It's trying to consolidate there and take support of the RSI 40 and then trying to move up later on. So that's what it looks like. But overall, flattish green is what you make out from the broader markets. So that's the summary of what these different sectoral indices and the heavyweight index, heavyweight stocks, and then broad market indices is telling the story. It's all sideways, a recovery attempt for sure. Moving on, if you try to understand how the institutions participated last week, right? It was not too much of selling by the FIs as compared to the previous week, but yes, despite the fact that we had a favorable budget and a favorable rate cut that happened. FIS seems to be not bothering at all, and they continue to sell as before, while the domestic institutions did not buy as much as it did last previous several months, but they did buy 6,450 crores, and overall net to net it's still negative. So FIS selling has to stop at some point before the bulls can call for something. Reside in selling like hell. Now, if you try to understand the global markets, the US markets primarily, and the different currencies and the gold and crude oil, the commodities, let's try to understand and begin with the dollar. Once again, I attempted to move up, but it did close negative 0.4%. It was trying to move. It had moved about almost 10% after the Trump came in and said 108.5, and sideways falling momentum is what you're seeing. Just slightly slipped to the sideways from the gold, but otherwise the dollar is in the strengthening mode basically. Just taking a pause, I would say. But the rupee, that is the Trump. Look at the candle of the rupee. It's a wide range bullish. Wide range bullish. 1.2% over last week. It's at 87.59. Can you believe that? Where is it heading? 60, 70? No. It's an all-time high rupee. Weakest rupee is what you see. USD currency pair is 1.25% up and heading towards 88. All-time highs and rupee all-time lows. That's not very encouraging for an emerging market country like ours. Crude oil has dropped 3.7%, which is only relief due to some Middle East school of crude oil prices come down. It's at 71 nearby. That's very positive momentum. It's sideways momentum and falling. Remember, it had moved up some 13%. Yeah, it has moved down 13% now. Yeah, probably. Looks like. So, if you look at the global markets now, Dow Jones, Nasdaq, and S&P 500, they all close flattish. That means indecision. Trump is coming out with tariffs. Different countries and drastic presidential orders are coming every single day, and then market is just taking a pause and waiting before it breaks out from the all-time high. For us, I used to go before the top of the channel for the Dow Jones, but the momentum is very close to the bullishness, not very far from the all-time high, but there is some indecision as a short. Overall, it was red for the US markets last week. Did not perform well. We'll have to summarize that way. So there is sideways in the global also, and there is some threat with respect to the rupee depreciating. That is where the trouble is. The rupee had depreciated further after the RBI rate cut. Probably fundamentally it's supposed to behave like that, but rupee depreciating too much is not great. So only relief is that the crude and gold. I forgot to talk about that. This is the gold chart that you see here. Gold has made new all-time high. So gold making a new all-time high would mean that people are pulling money away from the stock market normally. So you have to be very, very cautious when it is an 80% breakout in the gold that has happened just in 2024 onwards, beginning onwards, the last 1 year, 80% move up on the gold and it's at all-time high. Rupee is all-time low, gold at all-time high, and US markets at all-time high in this. That's the summary. Trouble. Not very encouraging. Global cues are there all around. That's why market is also facing the resistance. It's now few actions for educational purpose, just to make you understand how the charts can be picked based on the momentum and the chart patterns and the trend indicators. So same methods are used for the Nifty as well. So here it's a Laura's Lab. It's a pharma stock, and it's already breaking out from that trendline channel and heading towards all-time high. 1:1.5. The score can easily be looked at, have very tight stop losses. The reason for that is bullish momentum rising and bullish trend rising with huge volumes. There's a big sell-off happened, so have tight stop losses for sure. And tube investment is a short opportunity. We could study the short opportunity from this. Tight stop losses here also. But there is a chance that they can fall to the support zone. It has breached the RSI 40 and it's in the bear zones. On the medium term and short term, it's in the bear zones, and volumes are also big, and then it looks like there is a possibility that you can head towards that 1:1.5 or slower trade. Short side, so one long and one short. And the final strategy for the next week is Batman strategy, which is not hedged actually. So you have to exit the moment it breaches 23,000 and 24,100 on the upside. Absolute cut off the trade the moment it breaches that. Right. So a reasonable profit, not completely hedged. If you want to hedge, you can buy one lot of at the break-even points on both sides. You can buy one lot of FAR OTMs. So basically, Batman strategy is where you sell double of what you buy, and the buy is an inside hedge. OTMs and FAR OTMs. Inside hedge is inside OTMs and FAR outside OTMs. And you can also hedge by additional 2 lots of buying put and call on both sides if you want. But the range is decent enough for it to contain while the market is trying to move up with small pullbacks in trade. So this is known as a Batman strategy, and probably also looks good, and the margin requirement is also very less. So that's FNO Nifty weekly Batman strategy for the next week, and let's wrap it up. The market managed to close green for the second week, consecutive week, and this is after it met with resistance in the later part of the week. But it managed to close positive flat and positive 1.5% on the Banknifty. There was volatility because of the events that came in RBI cut, but market did not show too much of excitement and the RBI went as it was expected, even though it was positive. So correction previous week was 13.3 and Banknifty at 12.1. It seems to be a little more stronger. The fact is that first continued to sell, and we had a very foolish rally of nearly 70%, and the correction is not going below the 30%. That is not too much. More corrections expected considering the ferocious rally that we had in the last couple of years. Now, if you try to bucket together the factors that were the bulls and the bears, we had a green close that's positive. We had a momentum that climbed to the sideways and sustained that last week. We had a trend that maintained the bullishness in the short term at least. Bullish bands have slowly started expanding the upside with the bullish bias as compared to the previous week where it was contracting. So if you look at the factors in favor of the bears, the first current to sell. US market is red. Open interest is negative on futures OI as well as options OI for the weekly and lower price action on the medium term can still be seen. Sector indices are sideways still. Indices are medium term bearishness with respect to the trend indicator ADX, and heavy stocks also sideways. Power markets are kind of flattish after a decent correction. It's kind of giving flat close and not reversals in the charts or the candlesticks. Now it's still below the 200 exponential moving average on both indices. Important to keep in mind. That's a big thing that's in favor of the bears. Market has have sort of closes of green candles above the 200 exponential moving average before we can confidently see that it's bullish again. Our recovery is happening. That signal has not come in yet. We have US tariffs and the election outcomes reaction pending. So keep that in mind. Market is not too much excited about the budget or the RBI. And any election, you don't know how it's going to react. But overall, if the recovery for the second weeks and the reversal pattern and the sideways momentum climbing all gives the hope that there can be a mild bullish in the next week as well. Right? It cannot be, so that's what it is. So always keep in mind that the technical charts will go for a toss if there is black swan events like war or a pandemic or interest rate big rate surprise cuts or election outcomes and all that, then technical charts won't work. So for the next week it's 24,500 and 20. Oh, there's a correction there. I think 23,000 is what you have to look at for next week, and 48 is what you have to look at for the next week. Okay? That's the levels that I look for the Nifty and the Banknifty: 23,000, 24,500, 48,000, and 50,000. Right? Roughly, approximately, that's the range where the market is. But in order for the market to move further up, it has to reclaim the 26,000 on the Nifty and the 54,000 on the Banknifty for us to say that yes, next cycle of rally is coming. If until then it's consolidating over years. Always hedge your positions and hedge your portfolio for sure, because your capital is all that you have got to protect for you to remain in the game if you're into trading especially. And these collection opportunities have a IP mode, buying good quality stocks. Also, rental incomes can be there from the covered calls and cash good puts and all that. Strategies are there in the playlist. Check out that. That's all I have. So if you like the content, subscribe and like and comment and give us a feedback and share it with others. Share it to others, please, if you like the content. And I'm also active in the other social media channels. You can check out that as well. X, I'm posting analysis and charts and views often, so you may check out that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.